So good day. You're welcome back this morning. Um, I'm on my screens this morning. I want to share with you quickly. I'm on a volatility 75 and a, a quick analysis on what's happening on volatility 75 today. So all the volatility 75 index traders, I want you all to gather here and let's analyze the market and see what's happening this morning. I am a child of ICT. So my analysis is all based on we don't use any indicators here. We don't not that we don't believe indicators work for you, it may work for you, but indicators we don't trade with indicators. What we believe is that indicators lag, and then what indicators would only point out to you are things that had already happened on the market. All right. So we believe that once you're on the market, you shouldn't play with your money. All right. Indicators may lag. Indicators may just show you what has already transpired. So I don't trade with indicators. I don't believe in indicators. I mean, retail traders, the newbies are all over trading with indicators with their moving averages and all that. You may win at a point, but it's not going to last. If you want to make trading a profession, you may have to drift away from indicators. Someone asked about robots. What is my opinion on robots? Um, Robots are just programmed to execute trades based on what it sees, a certain pattern it may see on the market. But the algorithm that trades, that moves the market, that moves price, doesn't respect robots. All right. So those who also believe in robots for trading and all that, I don't say that it doesn't work. It works for some people, but I don't trade with robots. My analysis is purely market based and it's purely finance. All right. I'm a finance student. When I my profession, I studied finance, and my mentor, what he teaches is also finance based. So it works well on the market, and to make ends living from the market, I don't know, you have to stick to this basis, and I believe you are going to do well. So let's go to today's video. I'm going to analyze volatility 75 quickly. I want to take you, we are always going on a bigger time frame, and then we'll move down to a smaller time frame as I always do. All right, so let me quickly take off everything from my charts, then we move. All right, so on the higher time frame, you could see that market actually trended downwards. Our market moved from a certain high. From this point, it came down this way, and then to form a low, and then it went up to form this high, and then it traded down this way, formed this low here, and then it came up again to form another high. All the time when the market is on a downward movement, you could see that we have higher highs. Sorry, when it is on a downward movement, the highs that form after the previous high is lower than the former high. So we have lower highs, lower highs. All right, so we have another high here, but this high is lower than this, and then we have another high here, but it's lower than this. So this is the first high, and then this is the second, and then this is the third. So we have a high here which is higher than this, and then we have another high here which is higher than this. So we consider the current one that is formed. So the current one formed here is lower than the previous one. So the current one here is lower than the previous one. Okay, the highest point on the price level. So price moves downwards this way. So we have a low here, all right, and then we have a high here. So, and then when you come down again, we have another low. So this low is much more lower than this. Okay, so we have a lower, which is more lower than this. All right, and then we have a higher, which is much lower than this high. All right, so we have lower highs and then lower lows. All right, so this is it, and then we have another price moving a price swing to this low. All right, and then we could see that price form another high here, and then what did it do? And then it came down to form another low here, and then what was the next move? Our next move was here. So now I have a question. So if you find a low here and we have a high here, is it matching what we previously saw? Yes. So all the high here were lower than the previous one. Then we have the low here. This low is much lower than the previous low. So we are still in the same trend. Then what happens here? This high that is formed here, is it lower than the previous high? No, it is not. It is not lower than the previous. It is not lower than the previous high. So now we have a higher high which has been formed instead of a lower high. So if a higher high has been formed here instead of this, then what we say is that the market has shifted. So we call it a shift in market structure. So the structure was a downwards movement, price was moving downwards, So don't expect that when price is moving back downwards, it moves in a straight line. Price moves in a zigzag format. All right. So we have these higher lows and high highs. So the higher lows. All right. So when price has shifted or the market structure has shifted, normally what we expect is that price must continue to the direction that it has shifted. Okay. So if price has shifted towards this direction, what it means is that it has broken this high here. It has violated this high here, and we are expecting that price should continue upwards. Now, as you know, price doesn't trade on a straight line like that. It has to do some movement before it goes up. Now, anytime you see that there is a shift in the structure, okay, anytime you find out that there is a shift in the structure, so for instance, this is the high that was formed, which was broken. So this high has been broken at this point. You get it? At this point, this high has been broken. All right. So when this high has been violated, what necessarily must happen is that price must trade back down and take liquidity. What is liquidity? Liquidity is simply price point or price levels where there is much orders residing. There are orders residing for price that will help price to move. Okay. So in the setting here, when we are looking for liquidity for although price has made us aware that it wants to shift course, but if it wants to shift course, it has to now come down. The market is more of buying and selling. So anytime that there is buying, there must be selling. Okay, so whoever buys, someone is selling to the person. So now we have to come down to this area, or this within this area, back up to the lower point of it, to see that if there are any kind of buy orders residing inside this area. Okay, from this high point to this lower point, we have to come back and see if there are any orders residing. So from this point to this point, if there are any orders residing in this point. All right, so now let's go down to our daily time frame so that we get a broader picture. So now I was saying that price has moved from this low to this high, and we have to come back into this area to look for an area where we can place orders, or where there are buy orders residing, so that the market will come and the market will come and take the buy orders and then rally up with it. Okay, so now this brings me to some of the concepts taught by my mentor, all right, Michael. So now let's go deep into finding areas of liquidity where price can necessarily trade into. So we are on the we are on the daily time frame. Now what can you see down here? So if I close my eyes and I watch, the first thing I can see is there is an order block here. Right, I'm just considering only the body. I'm excluding the wick. I can see another block here. Okay. um I need something here. So okay, so here we have daily order block, and this is bullish, or is a bullish order block. So here, when we say bullish means that the market is supposed to help propel the market into a buy side, or it's supposed to help the market go up. Okay, so this is a bullish order block. All right, let me change the color of the, so that it's more visible for you to see whatever. So this is a daily bullish order block, this particular bullish candle here. So bearish candle, so the bearish candle here, sorry, the bearish candle here, this beefy body, the one with the more body here, is the one that I am considering as the order block. Okay, good. And then what's next? We have identified that there's one order block here. For those of you who don't know what order blocks are, you can go back to my videos. You'll find videos on what order blocks are. So there's one order block here. Just after the order block is a liquidity pool, or liquidity void, sorry. So there is another gap here. Have you seen this area where price just traded up once and price never traded back again? So in the market, anytime we have price trading up this way, there has to be an equal. So when price is trading up, what it means that price is buying, so there have to be some sellers also taking charge of the market, of whatever, who is selling to the buyers. So this is it. So anytime there is only one movement up and there are no movement back down, it means that there was only buying, that there was no selling. So price must come back and balance this situation. Okay, so price must necessarily trade into this area and balance it. So here we have another item called a fair value gap. Okay, so here we call this one to a fair value gap. A fair value gap is a gap where price has just traded once and never returned again. Okay, so that is the fair value gap. So let me type it here, fair value gap on the daily. All right, is a daily fair value gap. Beautiful. All right, so let's move on. So I'm expecting that price should come and take down this fair value gap. Price should come down and take this order block, into trade it into this order block. See, and when you go down into my videos, you realize that other blocks that have fair value gap just be above it are the most strongest order blocks, or the most valid order blocks. All right, just below this, just before this order block is some lower here, a low point here, a lower price point here, which is a liquidity point where we call it a low, or a low. Yes, so this lower point is a point where we have liquidity residing. Why? The retail mindset says that this is called a resistance level, a support level. The retail mindset says that when price trades here and it bounces back away, all right, anytime price goes and comes back to that particular level again, price, what should price do? They are saying that price should either, they are teaching is that price should go back up. So they call it a support level. Okay, and that their assumption also is that if the price doesn't continue up and it breaks just below this, they will have to sell, because they believe that the support level has been broken and so price is going to go down. Now the market maker also thinks the opposite. Anytime you place your sell, so they place what they call sell stops here. They place their sell stops here. So when price gets to this point, necessarily what price does is that it will take down, it will trigger all the trades that they have. If it breaks this level, it will trigger all their sell stops and begin to rally down with it. And they will be happy because they feel that, oh, my trade has been triggered and is going my direction. The next moment they see is that price is going opposite against them, and then the retailer is winning. You get it? So basically, that is it with how the retail mindset works against how the market makers also work. All right, so we have a low here, and this low, the liquidity residing it is what I've just explained to you. The retailers, they have placed their sell stops below this. Okay, so that is it. Now, what is the next thing to consider? We have established that there is another block, there's a fair value gap here, the liquidity resting below this low, so price should necessarily dip deep into this area, and then we'll take our trades, execute our trades, and then run up with it. Now, what is currently happening on the market? We can see that the market is not coming anywhere closer to this area. What could necessarily be the reason? Well, the reason could be that there are some liquidity pools up here that price must necessarily take before it trades down into this area. So now let's go down to a smaller time frame so that I give you a breakdown of what I have seen on the market. So nicely, you could see that market was the market was trending here from here to here to here to here, this way, all the way up, then this, and then this side. You could see that at this point the market is trying to fail to press up or to continue pushing up, but then don't let that just deceive you and think that, oh, the market is not willing to move up and all that and blah blah blah. Let's go detail into our chart and see what is happening. Let me go down to the 1 hour time frame. So on the 1 hour time frame, what do we see here? There was markets movement in a certain direction, and there was a structure break. So let me show you. So market moved from this point to this point, and then it came down this way, and then price pushed on to this level, and then what happened? It came down to this point. And then it went up this way. What can you see now? Nicely, you can see that there has been a structure breach here. Okay, you can see that there's a structure breach here. So you could see that there was an upward movement, but there was a structure breach here. Okay, so there was a structure break, a break in the market structure in this area. Okay, so this break in the structure means that, okay, let's go for a downward curl or a downward movement, because already in the first place we have fulfilled the higher time frame, taking down what's the name, higher time frame. We have now already reached that level that we have to now come back into an area and take liquidity, but now there are a few liquidity resting above which must also take and help us run down. So on the 1 hour time frame, we are seeing that, okay, now we have also seen a breach in trend that price should also rally down. So when there was a breach, price actually rallied and took down liquidities at this point. So now let me quickly take down this. I don't want, if I click on delete, it will take away every single thing I placed on the chart already. So I have to take my time and take them off one after the other. So now look at this price point. Okay, I want to take my time today. I want to take my time, explain to you detailed, give you some detailed note of how you can go about analyzing the market so that you always also be on the winning side. All right, so now look at this price point. You see, when there was a break in structure, price has to trade all the way back up into this area. What was it coming to do? It was taking down liquidity. It had to trade into this other block here. You see, almost just a bit above the mean threshold of the beefy candle, although this candle, this bullish candle, this bullish candle is also an order block. Okay, now at what point did price get and then a reverse? What was the reason why the price reversed at this point? Now let's go down to a smaller time frame and get the true picture of why price reversed. So look at it. Price traded into this particular candle and it reversed. What was it? Was it anything specific? No, let's go down to 15 minutes time frame. So on the 15 minutes time frame, you could see that this bullish full body candle was the main order block acting here that actually caused the reversal. Now let's go down to 5-minute time frame. 5-minute time frame shows you that, you see, when price traded here and came down, it left some gap here, it was filled. Let me show you this small gap. It was traded into, then price traded into the gap again the second time. So now normally this particular candle here, which becomes the order block on the 5-minute time frame, is a proportion block because it rather pushes price to go down further with more speed. So look at the level where price traded into. And I told you something, that anytime you have you consider any candle as an order block and there is a fair value gap just above it, it makes it more valid. You see, and there was this small gap above it. So price actually traded into and then touched the body of this candle, and then what happened? And then it reversed. So this is a more refined entry. Okay, so this is a more refined entry that you could have placed your stops here and then just you take the trade from here. Okay, all right. So now let's go back to the 1 hour time frame. So price has reversed at this point, and now we have a market structure now showing something like this. Okay, so this was it. It moved down here and then it came up all the way this point, and then it came down. Let's say it came down to this point. Sometimes ignore the internal liquidities that it forms. It came down to this point. Okay, now where necessarily, so it is, we are now on a downward movement because this low, the low that has been formed here, is lower than this. Okay, so if you are not certain, let me show you well. So look at the low that has been formed here. So this is actually the low, the real low. So it is lower than this, and we even have another one here which showing us that price is even dropped further than that. So now we have a low showing us this way. Okay, so this is a real low that has been formed here. Now necessarily we are on a downward trend, so we are always going to have we are always going to have a higher low. This is a high. Now the low that must be formed here must be lower than this one. So now we are going to also have another low, another high which is going to be formed here, which must be lower than the former low, the former high, sorry. So the first high formed, there's another high formed, but this is lower than the first one. So there's going to be another high which must be formed here, which must be lower than this. So at necessarily which point do you think that high will be formed? So nicely, let's go down into our chart and look at an area where we can find an area of liquidity that necessarily price can trade into and reverse. So quickly, before this, just this downpour here, you could see that there was a gap here from this particular point to this point. You see, and price came down to closing on the mean threshold of that gap. So there's a fair value gap which has been closed halfway. And on a more notice, we always want the fair value gap to be closed fully. It's not every day that fair value gaps close fully. But now look at the number of highs that has been formed on the mean threshold of that gap. The mean means that the middle of that gap. Look at where it has been formed. There's a high here, there's a high here, there's a high here. So we have triple highs here, which means that there are liquidity resting above it. The retail mindset says that, okay, there is a high here, and then what will happen is that if price gets here and it gets bounced, or if price breaks this high, oh, I'll buy. So they are expecting that this is a resistance level, but price will break it and then they will buy. So when price penetrates into this high, they will buy. But then the retail, the market maker is waiting for them to buy, and then it will trade against them around this area and sell off. So now let's necessarily look at, but even with the retail mindset saying that there is a liquidity, what's the name? There is market going to break this resistance level and then it buys. We are seeing liquidity resting above here. So here they have placed their buy limits here. They have placed their buy limits here, that when price or buy stop, when price gets here, it should trigger their buy orders and then they will continue. And when they buy, we also sell. The market maker sells against them. Okay, so now let's look at, apart from this liquidity resting above this area that necessarily price must trade and come into, is there any other point here that price can also come into? Now let's go down to a smaller time frame. So my analysis is always from the bigger time picture to the smaller time frame. Okay, can you see all the liquidity gap here resting in here? There's liquidity gap all over from this point to now. Let's still go down to 15 minutes time frame. Can you still see there is more gap all the way? This one is more like a buy side imbalance and then a sell side inefficiency. Okay, so the market just bought once. It was just buying all the way this way. There's a downward, a strong downward movement. Although there was an upward movement, that there was another strong downward movement, which price must counter. Okay, then let's go down to our 5-minute time frame and get more refined markets for that. So now you could see that if we consider these continuous candles here as one bullish, let me sorry. So if we consider all this continuous candle here as one order block, okay, necessarily we expect price to even trade into this order block and not even continue further. Okay, so if price should even trade into this order block and just close in on the gap here, if it's fair, or even if it closes, just price trades and comes down into this area, you can just even execute your trade here. You can execute your trade here anywhere along this area, put your stops above this high, and you are good to go. So you place your trades. Just, you see, when you even look at the bodies of this, the wicks of this this continuous order block, it is almost to the fair value gap on the 30 minutes time frame. All right, so you can execute anytime. If price should penetrate into this order block anywhere above it, you can execute your trade and put your stops above this price level, and we expect that from that point price should trade downwards, and then we are going to see another lower point formed. I'm expecting the high to be formed around this area, the 39,385 or 39 big figure, which is somewhere lower than this. So 39, where can we find 39,500? Let me put the visualization. 39,500. Sorry. 39,500. So for nothing at all, we can even expect price to come to this area, 39,500, the big figure, and then we'll just go for the rally down. Okay, when you look at it on the 1-minute time frame, what can you also see? Let's look at it on the 1-minute time frame and see if we find something. Okay, So on the 1 minute time frame, this is what it is. So on the 1 minute time frame, this is the area we're looking at. What can we see here? So nicely, you see this 39 5,000. There's a nice gap here that price had to jump. So if price should close in on this gap, price will be okay to just even shoot down. All right, you see this, there's this gap here, that there was a gap between this price and this price point. Price can close in on this gap and then it will just continue to shoot down. All right, and then your stops is just below it, above it. So for instance, let's place a trade. Sorry, if you can place a sell limit of this somewhere here, and then a stop loss above this. So we have a stop loss of 6 USD. And where can we say, okay, let's take profit? If this is going to be the high, okay, and then we've already established that there's a high, a lower here, a low here that was formed. Necessarily, we should expect price to come and take down this low. So we can place our take profit on this level. Sometimes not so easy to, because of the lines there. Okay, so where can our take profit level be? So imagine we are sacrificing 6 for 48. You know, this is a lower lot size that, I mean, I'm not really placing a lot of trades here. This is a lower or the least lot size that will place even here. So come to think about it, it's worth it. All right, it's really worth it. It's really worth it. So guys, this is where I'll leave you for. But then we can still look at volatility 75, 100. This is 75, so we are not volatility 100. Let's look at what can also transpire possibly here. Yesterday I made a video on this. You can check it out for yourself on my channel. There's a video to that effect yesterday when I was recording and explaining the update on volatilities 100. I took a live trade and you saw where I've taken the profit off. All right, so basically if you are also trading volatility 100, this is what you are likely also going to see. We established that market had also broken a structure here, and then we expect that it will trade down into this area, and then we expect that it will go up. I mean, it's going to go up and take down this high. But before it takes down this high, so you can go and watch yesterday's video, you would understand it better. Before it comes down to take down this high here, I think that it has to also get rid of all the liquidity resting below this area before it rallies up. So now let's look at it. Here we can see that price, after it traded from this point, it rallied up. There's a liquidity fair value gap here that price must necessarily close in. But when it comes down to the 1 hour time frame, do we also see any gap that price must necessarily come down into and then get rid of? We could also see that there was this small gap here that price had not actually also closed in on after price had to rally from this side all the way up. All right, then let's look at it on the smaller time frame. On the smaller time frame too, you could see the same thing. Actually, price had traded and then it landed on this, so we are considering this as the order block. So let's say it came into the body. We are looking at price coming to take orders from this bullish order block here, bearish order block, bullish order block here, and then either it rallies, or when price trades deeper into this, we may take trades. But I won't take trade here because I mean it's okay for me. If it push further down, then if you take a trade here at this point, then you can place your stops below this level. Let's look at it on the 15 minutes time frame as well. On the 15 minutes time frame, good. If you place your orders on the 15 minutes time frame, can you see that there are some fair value gap here? Price actually dipped a bit into it, but into the mean of the fair value gap, and then it's rallied up. It didn't close in fully on the gap on the 15 minutes time frame, but with that of this side, it closed in fully. Price closed in fully on the gap we had here. So we're looking at this gap to be fully closed. Either price trades down further into it, it should be fully closed. Okay, so sometimes what I do is that I change it to a more that if price should come towards this direction, it means that there's a more likely area that price should trade and then take orders back. So let's look at it on the 5-minute time frame. So on the 5-minute time frame, you can see clearly that there is an order block here. Okay, there's an order block here. All these areas, price had closed in on all the areas here. So we're looking at only this small sided area where price has not fully closed in on. Okay, we are looking at this area where price has not fully closed in on. So you could see that if you are going to consider this bullish candle as your order block, you can wait for price to trade in onto it and then you take your orders. But still, price can come down and touch the wick of this small candle here. All right, so this is basically it. So now, if I'm looking at this area, I can go down to 1-minute time frame and then still break the market down further. All right, so price traded here and then there's this gap here. Price can close in on the gap, or it can decide not to. So when I look down here, what can I see? I can still see a fair value gap just below this price point. Okay, so if price should also break this level and trade down into this area, then here I am more certain that price is going to take down this 2 equal lows here, and then my property, I'm going to make it more red to tell you that this is a danger zone. I take a trade here and then I'll put my stops just below this area, and then you are good to go. You get it? That's fair. So basically this is what I will be expecting, or I'll be looking out for. If price should trade and come down into this area, you could see that this fair value gap here, it can close in and still trade down and then come down to this area and wants to take. So when you go up on the bigger time frame, what can you see? So you could see that price can still trade into this area. If it trades into this area, you take your trade. Where your stops will be is either you put your stops below this or your stops below this area. All right, so basically that is all there is on the market for you today. So I wish you all the best in your trading, and then enjoy the rest of the day. I'll give you more update as we go along. Enjoy your day. Please, if you have not subscribed to my channel, do well and subscribe to the channel, and then I'll be giving you more live updates like these ones as we go along. All right, enjoy your day. See you.